Welcome everybody. Shane Carter here, Hampshire Capital. With me as always, Eddie Austin. How's it going, buddy?
Going great, man. And I'm super excited because today we are sitting here with a signed purchase sale agreement for another 206 unit multifamily property. So, one thing that's cool, and I think we never really think about it, but let's talk about the steps leading up to this point. So there's a lot of work even before we get to an LOI phase. So let's go through that real quick.
Yeah, absolutely. So this is a fantastic opportunity, and another great buying opportunity that we got, which have not been fruitful or many here in the last 9 months, but we finally got a good one. We had to say no, hundreds of times, quite literally. But we have a great broker relationship, which is really how I believe most great deals are done. We have a great broker relationship with the guys there in Dallas, and they knew this one was going to fit our buy box, because frankly we had told them no so many times and given them the feedback of what we're looking for and why deals weren't penciling for us. So when we saw this one come across the desk, we immediately saw the location, the vintage, and the basis and the in-place rents. Did a quick rent comp analysis, and within a few hours we booked flights. We were jumping on this thing, and we jumped right down there. You were there, myself, our business partner Nick was there, and I think that show of force and that quick action too is a signal to brokers that these guys are serious. When they see something they like, they jump on it and they don't hesitate. And it's action, and it's fast action, and we're there, and we're going through the asset. We're asking the right questions. We got our ducks in a row with our property management firm. We got our business plan and pro forma and underwriting squared away. We got our PM firm to bless it and confirm our rent growth assumptions and our business plan in terms of the CapEx and value add. And look, the basis story is one that can't be overlooked. So from there, we got right to writing up an LOI and submitting that LOI again quickly. All of this acting as quickly as possible. We got into
a little context. Not to interrupt, but just give a little context on that. Is so they gave us kind of a broker valuation of other properties, and they gave us a couple addresses, and we immediately went and drove these assets and looked at those and looked at rent comps immediately. And our team back here already started looking at rent analysis as well. So, our broker gave us some things that we might want to check out, and we immediately did that, and we gave them feedback on it. So, again, tendering that relationship with your broker is key, especially when they tell you something. Hey, you might want to look at this property, go check this out. We did that.
Yeah.
We provided feedback within a day.
Yeah, no, great point, Eddie. Thanks for bringing that up. And that was part of our initial tour prior to writing the LOI, prior to putting the business plan together, is we toured that asset. But then that same day, we toured 3 or 4 or 5 other properties. I don't remember. It's all a blur now. But we took detailed notes, and we saw each one of those properties and what they were getting for rent. And, what was the feel of that property versus ours, location, neighborhood, approach, just some of the things you can't really see unless you're physically there, right? You can't do a desktop analysis without seeing that sort of feel of a property. But that all fed into our assumptions about our business plan and about the rent comp analysis and why we chose certain assets to be rent comps that are obviously in our area, our 1 mile radius, and in our vintage category, but why we kind of discounted some rent comps or more heavily weighted others is because we physically go to all of our rent comps and see them ourselves, tour the classic and versus renovated product at the rent comps, and get a feel for what our rent comp property looks like versus our own.
Exactly. So, once we went under LOI, that's where the really nut and bolt start of the negotiation of the deal. So, we submit an LOI at a certain term, and then your buyer, has an opportunity to review other LOIs that came on that deal. We were not the only one that submitted an LOI, but we were accepted first and best. We'll never know if we had the best price or not, but the way our terms was laid out, they really liked that. And then immediately we got to interview they got to interview us as the buyers.
Yeah, and
only ability to close.
Yes, and that's where I think we won the deal, Eddie. Is that buyer interview call, which I don't know if a lot of sponsors have been in those or put a lot of weight on them or not, but they're very important. And I would say that I think the number one thing that sellers are really looking to get a feel for is what's your confidence level around your equity and what's your ability to close, and who are you as people and operators. What's your track record, and how are you? What are your plans and thoughts for this property, and what's your business plan? What are you looking to do here? And I think one of the things that maybe had us potentially stand out above others is the fact that we really are. It's not just words on our website. We actually really do care about our ESG initiatives, about the environmental components, the social, and the governance. And one of those things is really the social programming at properties for the residents. And this particular ownership group had amazing social programs at the property already in place, and we had identified that. We had spoken about it with the site staff and some of the residents we saw there. We actively saw them participating in those social programs, and so that was important to us. And we keyed in on that and said, "Look, guys, you've done a great job with the social programming at the asset. We want to ask you a bunch of questions about that. We want to continue those programs, and we want to make sure that the residents don't miss a beat when the ownership changes hands here." And I think that carried a lot of weight, that we actually saw that, we cared about it, and we were asking the right questions to go ahead and implement that post close as well.
Absolutely. And from there, I think also one thing that helped tremendously is we're a Dallas active investor. So we actively own and operate a Dallas property as well.
Yeah.
It is just
15 minutes up the road, right?
Actually, right.
Yeah.
So that was another box check, that we already have bought an asset in Dallas. We understand Dallas market. We have a property management company that actually came on site to help us review the deal. And they were all aware of that. So that kind of helped check the boxes. So then we go in this deliberation phase. And that's where it starts getting fun, because now you're actually getting down to the brass tacks. You're getting to the PSA, which is your purchase and sell agreement. At that point, the owners are going to say, okay, well, I know you were asking this. And then it goes back to a trade-off, right? So there's certain boxes that we were hard set on. And the seller had certain opportunities that they were like, this is where we are at, and we're not going to go past this. So that's always a fun process too, but this was actually enjoyable. We got to learn a lot. And through that process, now we sit here with a signed PSA. So now it's go time. So now is the time where we engage the team, and I think I'm super proud of this acquisition because the team was in the right seats at the right place at the right time. Mm-hmm. So we did a really good job of organizing, our internal construction manager. He was already engaged in getting some bids and stuff like that. Our property management company was engaged in getting bids for things like that. Mm-hmm. They were starting to dig through the books. So that started the due diligence period, the DD, and that is due diligence. And that's exactly what we do. We go in and we physically look at units. We look at the way evictions are done. We look at aged AP, if there is any.
We review all their leases as well and understand their criteria for renting. And we review and spot check those leases and their income verification, job verification, residency verification, et cetera, and make sure that checks out, right? So that we're not inheriting a bunch of residents that don't fit our leasing criteria. And it's that level of diligence that's super important. And unfortunately, we've learned that the hard way. But those are lessons you learn through the years. And now we know that you have to be extremely diligent on that. I just want to rewind one point, Eddie, in the PSA negotiations. That this process was all of about a 3-week process, and it was a lot of back and forth.
Really was.
And it was really because we have an amazing attorney. And the sellers, had an amazing group of attorneys as well. And so, every attorney sees things from different perspectives, and our guy's fantastic. And I cannot underscore enough the value of having a good, real estate general counsel person on your team.
200%.
It's just invaluable. And so he caught so many things that, for me as a sort of, fast moving entrepreneur, professional, CEO mindset, I've blown past half of those nuances in the contract or details that could come back and bite us. He catches every one, and he's extremely valuable that way. And one of them that was interesting was this sort of must-take contracts, right? So there's contracts that are you can cancel, some you can't, and there was some language he found. So they dig into all these contracts. We had a contract that was 14 years old. Okay, 14-year-old contract. It was good for 10 years, and then it had an automatic renewal period. And he went back through a 14-year-old contract and caught a clause in there that could have potentially hurt us. And we used that to have as a negotiation item with the current seller. We talked it through. We talked it through with the brokers, with our property management firm. And we really got comfort around this particular item that frankly I had no idea about, because I wasn't about to read through 60 pages of 14-year-old contracts having to do with laundry or whatever else. But that's why it is critical to have detail-oriented folks on your team. They're going to take the time to really protect you before you go into a deal. And that was sort of a part of the due diligence process as well, but we used it as part of the PSA negotiation process.
Yeah, I mean, it's so important. I mean, a contract is, it can help you or hurt you. And if you got to have somebody who can read the fine print and be on your team to help protect you, because it's, the seller's doing the same thing for the seller. Yeah. And, as the buyer, but at the end of the day, I think buyers and sellers want to work together, and everybody learns in the process. So I think it was a good thing. Yes, it was a 2 to 3 week process. It seemed painful at times. At the same time, it was fun because we learned a lot.
That's right.
So from moving forward, now that we're under contract, we've started the due diligence phase. We have already started to engage equity partners and started to look at the mortgage lenders, mortgage brokers, who we want to use. And of course, we're using our previous relationships for that. Yeah. And going forward, that's something you want to start thinking about. The ability to close comes with bringing equity.
Yeah, no, that's right. And look, the reality is we started this process weeks and weeks ago now, right? We've had a debt matrix of quotes going back, 3-4 weeks before we even signed the PSA, obviously. But now that we have a signed, executed PSA, we're kind of we've refined that down to a handful of options, and now we're gonna pick a horse here this week and start marching down the road, start ordering thirds, and getting after this thing, and finalizing our institutional equity partner this week as well, and going down that road, and then that's gonna lead us to having some slots open for LP investors, and we'll raise that out here over the next few months.
And I think it's super important to be just putting the cart in front of the horse here and planning, being proactive, going through this, because when it comes down to these things, you might have a 90-day contract, but man, those days come fast.
Yeah,
it really does.
And
yeah,
they
you
go
don't want
real
to be
fast.
sitting there at day 88 and go, "Oh man, we didn't do this, or we forgot this," and it's a real thing. So you guys buying properties, if you're just now buying your first one or two, that 90 days is not a long time. There's a lot to do in a 90-day period.
Yeah, there is.
And even when you got your LOI, don't wait for a PSA. When if you got the ability to close, you got a pretty good opportunity, you're going to close this deal, start putting in work right now. I'm just telling you from a seasoned professional, start putting in your work, stay in front of it.
Yes.
And because it comes fast. It really does.
Sure does.
You do not want to be asking for extensions.
No.
This doesn't look good.
It doesn't look good, and they cost you usually too if you want to get on.
Yeah.
So yeah, and then obviously we're gonna march down the road. We're gonna continue our due diligence process here over the next few weeks. We'll wrap that up, and then we'll be looking at a clear to close. I think we're already running title and getting that back here shortly, and getting that squared away. Getting the surveys ordered and getting our third party started with. We're definitely going to go agency debt on this. I think we've got that one sorted out. We did get a number of debt fund quotes that were pretty aggressive and fairly reasonable actually as well. But we just like the sizing and the safety and security of the agency debt products at this point in time. And also we have a short business plan, short cycle. This is only a 3-year hold. And it's a quick, business plan, get in, renovate units, drive the revenue growth and drive NOI growth, and then successfully exit into a much different market in 3 years from now.
Absolutely. Absolutely.
Yeah.
Well, I think we covered a lot of good things in this podcast here. And I think maybe the next one we might talk about in a coming episode is maybe buying the business, buying the LLC, because sometimes if you were to buy the LLC, there's some grandfathered in things that may help you, and rather than creating a brand new LLC to put this property into. So there's definitely some things there to think about.
Yeah.
So
we can talk about that in another episode. The old drop and swap.
Yep. All right, Shane. Well, again, hey, everybody, if you know and like us, you trust us, make sure you hit that little know and like, trust button, thumbs up, and make sure you give us that. And then, number 2, hit the little notification bell. And as always, we like to add value. So be sure to like and subscribe, but more importantly, leave us a comment. Tell us what you like about this video. Tell us what you want to hear more about. We're happy to do a deep dive on any subject within reason. So just, give us a little context, see where we're at, drop a comment, drop a line. Y'all have a great day.
All right. Thanks. We'll see you on the next one, buddy.